Welcome to this session, and in this session I'll be discussing for you in depth the strategy that I do use now from time to time. I decided to make my strategy as simple as possible. Now, the reason why I decided to do this, for the past years, I've now been trading for about 3 years, though it's now 4 since I discovered Forex in about 2021. However, my serious journey began in the year 2023, around September, when I started doing my mentorship. Now, the mentorship that I got the privilege to actually learn from somebody who has already been in the game, and that person really mentored me in the best way that they can. In most The most thing that I actually needed during that mentorship was more to do with risk management. Now, one thing that before I jump into the analysis of my strategy that I'm currently using is that one thing you will ever notice when you are a beginner trader and you are constantly trying to have a stand or have grasp a certain concept in trading is that you really don't want to you know be in this constant loop of, they call it the loop of doom, whereby you try one strategy, you feel after a few losses it just doesn't work in your favor. Now that thing can be very devastating, and in this video particularly I'm going to be sharing that tip, and that tip is just to enable you as a person to stick to the same strategy until you do master it and find out if how best it works for you. Now let's jump onto the charts, and the concept that I'm going to be discussing is also based on what they call smart money, alongside what I've just now implemented in my trading, because I can say that majority of people, I'm not exclusive of those people actually cannot really stay with a strategy if they have seen 3 losing streaks or even 5 losing you know trades in a row. That strategy, they'll consider it. The mind will the mind itself cannot allow you to do that. Of course, the kind of emotional discipline is not somebody that is not for everyone, and it's just all about knowing yourself. So if you really take time to discover who you are as a person, how much stress can you handle, and how much discipline have you built over the years, then you can really decide to continue with the way that you're trading. However, there is always a simpler way to doing something. However, it takes research and finding what best works for you. So let me jump onto the charts so that we can see what we can do now. Now, what I normally do with my strategy is that I basically just analyze one pair, that is the dollar index, and then I just superimpose it on the Euro USD, the GBP USD, and the USD JPY. Now, the dollar index, of course, it's a basket that has, of course, other pairs of, other currency pairs, within which, of course, it measures their strength, of which the major one is the biggest component in this pair is the Euro USD, and the Euro USD is the one which makes up about 50% of this basket, and then of course the other pairs, the GBP USD and the USD JPY. Of course, those are the things that really comprise. Now, whenever I'm doing my analysis, I always prefer to use the higher time frame, and of which I always start with the daily time frame. My daily time frame looks something like this. However, right now I've decided to disable what I call the wicks. Let me bring them back. I'm going to tell you the reason why whenever I'm trading I decide to always remove the wicks. The wicks is just, they call them footprints. They just show you what activity has been happening in the markets. Now basically what I'm having here is the daily, and the daily, what I do normally use it for is just to determine the trend for me. Now in this case here, if you can look at my my trend, the trend is to the downside because I basically just make my concept as simple as possible. I just look at the 200 EMA. Once I've seen the direction, then I always jump onto the 4 hour for the immediate trend. Now I really don't take a lot of time in trading. My trading just takes about 10 minutes each day because I already mark everything that I really want for the day. Now what I normally do, my strategy is as simple as possible, and it only works during the London session and the New York session. As you can see, the instructions is already even there. Trade immediately upon break of structure. Whether it is a change of character to the upside or a break of structure, it is just an indicator for me to enter. However, the confirmation that I do get is on this DXY. Once a break of structure has happened on the DXY, I jump on immediately to look for entry opportunities on these other three pairs. And also I use the DXY interchangeably with the Euro USD. If the change happens first on the Euro USD, I'll also superimpose it on the GBP USD. Now if the change happens first on the DXY, you can just simply superimpose it on the USD JPY because the USD JPY moves in line with the DXY. They are positively correlated. As for the Euro USD and the DXY, they are negatively correlated. Now, the reason why at the beginning of my recording right about here, I decided to remove the wicks. The wicks, reason being, the wicks just show manipulation. Now, the key thing that you really want to observe, you want to avoid those wicks. Now, once the candle closes above any of these points that I've marked, I'll be entering a trade, and then there is a target that I always have. I always have a simple target that is the next imbalance or where the liquidity point is. And the liquidity point, of course, when you talk about liquidity, those are equal lows and maybe also trend line liquidity. However, right now I only do equal lows and equal highs, and then of course I also target the next imbalance, which I do normally just of course include the wicks. Now this has simplified my trading because I also make use of the concept of hedging. Hedging simply, whenever my trade goes into hits not stop loss, I no longer use stop loss in my trading. Reason being, trading without a stop loss is much more easier to my trading because of just simple psychology. If you are hit out of a trade multiple times, there is a way you lose the morale of continuing with the same strategy. So this is one strategy that I'll be using for the longest period of time, and I just encourage, if you're somebody who is really struggling with your trading and you're finding difficulty when you're trading this with your trading strategy, simply the concept that I do apply is just hedging, and the concept of hedging just comes down to you learning how to trim and roll over so that you always mitigate the risk until you trim everything out and you have your money back in your hands. Now, the only key thing that the disadvantage of maybe hedging is that it ties up a little bit of your liquidity, of your, not liquidity of, but your margin, so that you really, it ties up your equity, not your balance. Your balance will always remain at a certain amount of money. However, it just ties up your liquidity. It doesn't give you the opportunity to add on to other trades. Now, this has been all for this video, and for my students that I'm currently mentoring, is just based on the basic concept of SMC. The reason why I stopped using SMC is for one reason. I already have a lot of strategies in my mind that I do trade, though I'm a pro supply and demand trader because it is what has worked for me for the longest period of time. Now, this strategy that I did develop is of course what works best for me as a person. The trading strategies are as many as possible, so choose what works best for you. So if you enjoyed the video, please do not forget to like this video, subscribe to the channel, and also Don't forget to check the videos that I'm going to leave up here and subscribe to the channel so that I continue uploading more content like this. This has been Foundation 28 Forex. Otherwise, peace out. See you in another video.